Hey everybody, welcome into Mining Stock Daily. We have a corporate update, an introduction to a company and a gentleman I have been just dying to get onto the show here for quite some time, the last couple of months. It's almost been a little bit of a cult-like following with Alpha Min Resources and the tin play. We have Tin Barons. This might be the closest thing to a meme stock type thing we're going to get out of junior mining, but I tell you what, it has fundamental reasons why tin has been so incredibly outperforming almost every metal here in the metals markets on a global standard. We did a very special tin special months ago, and this company keeps coming up, Alpha Min Resources. They trade on the TSX Venture with AFM. And they also have an OTC ticker, which I can't remember what is off the top of my head. But I was going to get that pulled up here real quick. I am a shareholder of the company, and it's a real pleasure to finally welcome in CEO Maurice Smith, joining us from Johannesburg, South Africa. Maurice, welcome to Mining Stock Daily.
Thank you very much, Trevor. Very excited to tell you about Alpha Min. Thank you for your time.
Yeah, it's you have just been doing a tremendous amount of marketing lately. You've made some great partnerships here. You've been reaching out, doing a lot of these video Zoom chats out to speculators and resource investors. This is coming off just a remarkable year, not only for Alpha Min, but also the tin market. So I guess I'll leave it up to you. Where do we start? Where would you like to start? Would you like to start on the macro landscape of tin, or do you want to dive into more of what Alpha Min's been up to?
Let me try and summarize it by combining both. Trevor, Alpha Min Resources has been on this journey for about 7 years now. And what is really refreshing is that Alpha Min identified this very rich, in fact, the world's highest grade tin ore body located in the DRC, in the eastern parts of Africa. And we identified this in 2013. And it's been refreshing that Alpha Min has now taken this asset from an exploration asset all the way to feasibility studies, to development, and ultimately to production in late 2019. So it really is a story of doing what we said we would do. We delivered on this project. It is producing. It has now been producing for more than 2 years at quite steady state levels. And we are very pleased to report that in less than 2 years, we already produced 4% of the world's mined tin. So we are, in actual fact, we are now the second largest producer of tin outside of Indonesia and China. So that's quite a remarkable journey. In terms of the commodity, for us, tin is the forgotten critical metal. Tin is absolutely fundamental to the technological revolution which is facing the world as we speak. You cannot have technology without tin. Why? Because as you well know, tin is mainly used in solder, which is the glue that holds circuit boards together. And the likes of electronic devices, smartphones, laptops, green energy in the likes of solar panels. Imagine the infrastructure spent on 5G rollouts, which cannot happen without tin. So it is fundamental. We like the supply demand outlook for tin. As a company, we are producing tin in the lowest quartile of the global cost curve, which is for us very, very important. So whether tin prices are low or whether tin prices are high, we are making money. And that's a very good position to be in. At the moment, our margins range between 50 and 70% of revenue, and we're generating quite a lot of free cash flow. We did inject development debt into our company back in 2018-19, and this debt has now reduced to levels of below $30 million, and we are looking to fully settle our outstanding debt before the end of this year. The balance of our free cash flow generation at the moment will be applied towards our blue sky potential. And I think that's very important, Trevor. Although we currently produce 4% of the world's mined tin, we have the potential to become one of the largest long life tin producers in the world. Within our current mining license area, we have a very, very prospective ridge along a 13-kilometer north-south trending tenement. And as we have released to the market previously, we have commenced drilling the next door deposit, and this deposit is right next door to where we currently mine. We've drilled 13,000 meters. We've announced the results to the market, and by all accounts, this is looking like the potential second mine for development. So where we are currently is we are very excited by not only what we're currently producing and the money we're making, but also the potential to develop the second mine within a stone's throw from where we currently operate.
I do want to take a quick step back just because I love historical context. You're currently producing out of the BC mine. I hope I'm pronouncing that correct. Yeah. So it is BC. Can you tell me about the discovery, like the original discovery of BC, and were the geologists and the team that made that discovery, were they looking for tin at the time?
No. So the BC mine was discovered by artisanal miners back then. Okay. And it was artisanally mined up until a point where international legislation came along, particularly out of the US through the Dodd-Frank legislation, along the lines of legislating against conflict minerals in conflict areas. And historically, artisanal mining was directly linked to funding armed conflict. So with international legislation, end users of minerals produced in conflict areas are required to audit and certify these minerals as to originate from conflict-free mining. And that really opened the door for the Basia mine to be converted from an artisanal mining location, which was always under license with Alphaman, but to convert it from an artisanal mining site to an industrial scale operation in compliance with international legislation. So naturally, demand for artisanally mined material reduced, and artisanal mining on the Basia site naturally reduced quite significant, which provided the opportunity for this mine's development.
Were there challenges working with the local community there in the area, going from more of an artisanal mine type of work to, a full-fledged massive mining operation? Can you kind of describe what those challenges were and how the community is involved now?
Right. So initially back then, the challenge was for us as a company to illustrate to the local communities and to create confidence with the local communities that what we are about to do is develop something at a scale which would benefit communities just as much as it would benefit Alphaman shareholders and the local and central government. And during those periods, we negotiated at length with our local communities, and we committed pre-building this mine that we will allocate 4% of our on-mine expenditure towards community development projects. And we've honored that obligation since then. We have now listed the various community development projects which we are embarking upon and which we will build in the next 3 to 4 years in a register. And there's a commitment within our area of influence. The various communities have agreed to what the scope of the work is, and we will certainly deliver and have delivered on those commitments going forward. So the benefit is that although it was intense in creating confidence because of the history, we have now proven that the benefits are tangible, and our communities are seeing these benefits every day in terms of employment, in terms of a local economy that's being created on the back of our operations, in terms of development projects, schools, clean water, healthcare, and the like has been very important and is tangible. So our social license to operate is healthy on the back of that, which is absolutely critical to our existence.
Yeah. Well, let me ask you something that I'm sure you get asked about 18 times a day, and that is the question on jurisdictional risk within where AlphaMin is located. Obviously, the Congo kind of, it obviously carries kind of a bad reputation here when it comes to jurisdictional risk. How does that pertain to where the mine is located? And obviously, you've mentioned a really nice social license to operate, but what's been the challenges for management to convince new investors and resource investors that the BC mine is in a safer place within the country of Congo than a lot of other explorations and mines?
You have a very good question, and really the proof of the eating is in the pudding. We found it very hard to convince potential investors back then that this is the path that we're looking to embark upon, and that we believe there is a thesis here along the lines of the fact that we will be, and now currently are, the only industrial mine in the North Kivu province, right? So our activities are visible, our activities directly impact this province, and our activities are significant. The DRC is not ranked very highly in terms of international governance rankings and the like. The DRC as a country is a very poor country, and we all know about the history with regards to the Eastern DRC. What we are finding is very refreshing in that our activities are being supported by communities and local government. And as a consequence, our operations, whenever there are challenges, we all get together, and for the better of all parties involved, we do find a way of solving the issues and moving forward. Why? Because the benefits are direct and visible. It's not a competition out there. We do not have 20 mining companies operating in our province. We're the only one. We're trying our best to do things right, and the benefits are there.
People typically have this anymore. We have this case of being it's very judgmental when we see success, especially in capital markets. And I'm just kind of curious because in the first half of 2021, AlphaMin reported a beat of $70.5 million. We have a higher tin price now than we did in the first half, so those numbers probably look to be improving. And I'm just curious, just based on with the success that AlphaMin's been having in generating value and market share, are you feeling more strings being pulled from the community, from the province, from the country to share some of that wealth at all? Because I say that because here in the U.S. we have this very like the billionaire space race is, I've never seen anything so being judged so much, right? But we judge success. It's like we want people to succeed, but once they reach a certain point, we want a part of the pie. That's very very stereotypical thing to say. But I'm just kind of curious, with the success, are you feeling more strings being pulled throughout your province?
To date, not, Trevor. I think the province are certainly enjoying the impact of the higher tin price. As the tin price goes up, as our profitability increases, their slice of our revenue increases quite significantly. So the benefits are being seen by local government. In terms of our communities, we are spending more and more money because we're growing our production base, which means more money into our communities. But to your point, there is a history, particularly in developing economies, although this also happened in Australia, where whenever there's a bull run in commodity prices, governments are generally seeking a bigger slice of the pie. To date, we have not seen that. The DRC amended their mining code in 2018. It was originally promulgated in 2003, the first mining code under the auspices of the World Bank, and it was the first revision was 3 years ago. And in that revision, there were some changes with regards to royalty rates and super profit taxes and the like. So the benefits of these higher commodity prices on the back of those changes back then will certainly benefit the DRC government. So I don't expect changes in the near future.
Yeah, tax changes, tax reform changes, nothing. I'm sure you keep a pretty close ear to the ground but you're not hearing anything that's necessarily of concern right now. Okay, very good. Let's talk about expansion. You are continuing to drill, finding more high grade tin deposits on each side of the where you are actually producing tin now. Walk us through here what you're seeing through expansion and really leading up to what do you expect to accomplish here, let's say by the end of the year.
So, Trevor, it's all about drilling. Our sense is that we're sitting on the richest license area in the tin world, and it's all about drilling and proving that up. It's one thing believing it; it's another thing to improving it up. And although we're quite confident, we've got to spend the capital and drill the meters to get there. So far, so good. I must tell you that the deposit right next door from where we operate, it's only 700 meters south of where we currently produce. This deposit, we already drilled 13,000 meters on. And as we have announced to the market, every single hole hit tin, and a lot of these holes hit very high grade. And so as we all know, the current mine is the highest grade in the world. We wouldn't be surprised if the deposit next door is the second highest grade in the world. So very pleased with the results so far. We need to complete our drilling. We are planning to convert the initial drilling meters into a maiden resource statement by the end of this year. Now that is we've brought that forward quite a lot. It will not include all of our drilling by the end of the year, obviously, because you need time to complete the statement. But we are bringing it forward to give us an indication sooner rather than later as to the economic grade of this deposit, the shape of this deposit, and sort of get us thinking as to how we can develop and mine this deposit. For us, we would like to accelerate the development of our second mine, and the sooner the better. Having said that, the detailed work and technical studies needs to be done. So I don't see a decision to mine or develop the next project, by mid next year, maybe third quarter of next year, but we will push as hard as we can.
And just to clarify, that maiden resource you're looking at would be for Mpama South, correct?
That's Mpama South.
Right? Okay. But there's still open opportunity for Mpama North. It continues to go deeper.
That's correct. So with Mpama North, which is the current producing mine, we drilled Mpama North down to 400 odd meters below surface. And this drilling campaign ended in 2016. Our last line of drill holes intersected the highest grade, so we know the grade is high at depth, but we stopped drilling at that point. Why? Because the size of the resource was adequate to justify the starter mine. Mm-hmm. We've always said that once our mine is in production and we generate free cash flow, will we allocate internal capital towards drilling this deposit at depth? And that's exactly what we're doing. We commenced in July, and we're looking forward to the outcome of these various drill holes between now and the end of the year in extending the resource size and ultimately the life of mine of our first ore body.
Okay, very good. How does, just with some of the stuff you're seeing from Mpama South, does the geology change anything with the processing flow sheet? Is it the same? That's what you're processing now? Is there differences? Anything that would make you think you need to change the flow sheet a little bit?
It is likely that we would need to change the flow sheet a little bit, but substantially, it is the same processing method. We need to crush the ore, we need to jig it through gravity separation, we will be producing a concentrate. So in doing metallurgical work on the ore, which we need to do later this year, that will give us an indication as to what minor modifications are required in the flow sheet.
Okay. And does that make your costs go up at all, do you think?
No. It's just modification. As an example, do you need to possibly crush it slightly finer to liberate the tin and then separate the tin from the other minerals through gravity separation? Do you possibly need slightly more spirals or shaking tables? Those changes are not significant in terms of cost, should they be required.
Okay, very interesting. I don't have to remind you or everybody listening that, I mean, this company's never seen the profitability that it has seen right now. The follow-up question is, what do you do with this profitability? Do you, the money you're generating, the cash flow you're generating, is it more likely to go into near side exploration work and expansion of the mine potential? Do you have interest in looking outside of the Congo at other projects? Maybe diversifying the metal portfolio? What is has the business strategy changed in the last 6 months?
It hasn't, but it's a question of capital allocation, right? How do we allocate the internal capital that we are generating? And I'm looking forward to the end of this year, because at the end of this year, as a board, we need to get together and we need to assess how we optimally allocate our capital. And the options are: point number one, obviously, as I said earlier, we would like to settle our debt completely, and we would like, our objective is to get that done before the end of the year. Secondly, surplus cash then needs to be allocated to potentially paying dividends. We need to consider whether we do share buybacks, but that's a factor of where the company valuation is in relation to market conditions. And then thirdly, very importantly, we have to assess the potential viability of the Mpama South deposit. Depending on what the initial resource statement tells us, we may decide to accelerate the various studies and potential development of this mine. And we do believe that if we can develop the second underground mine right next door from internal cash flows, that certainly would create a snowball effect on company valuation. So it's probably going to be a balance between some distributions to shareholders and allocating capital towards near-term project development and production growth. But it's a discussion and an assessment we need to have towards the end of the year.
Okay, very good. Going back just kind of on a personal note, has this move in tin surprised you at all?
So I've always been of the view that the tin price has to be above $20,000 a ton. I always felt that the price of around $24,000 to $25,000 a ton is what we will see. Okay, certainly, in believing that, we've seen a few dips in the last few years, and those dips came from, number one, the US-China trade war, which impacted the electronics industry. But those are temporary events, right? It's now behind us. Certainly, COVID last year has had an impact. I did not expect the pace of pickup in demand for electronic goods and the like following the COVID crisis of last year. So the pace of the pickup in demand certainly surprised me. And that certainly has resulted in very low levels of tin stocks on the ground and has resulted in higher tin prices. As of today's date, do I think that the tin price is too high? Definitely not. Am I talking to my own book? I don't believe so. The reason why I say that is demand growth of tin, as I said earlier, is linked to technology. Technology is going places. Electronics devices and growth in demand for these devices, together with green energy and 5G rollouts, are going places. For tin to keep up with a moderate estimate of demand growth of, let's say, 4% a year, which is quite low, I think it's going to be more than that, requires another 120,000 tons of tin in 10 years' time. That's another 10 mines the size of Alphaman, okay, in 10 years' time. Now, bear in mind that Alphaman is the first new major mine developed in the last 30 years. So the world hasn't spent money on tin exploration. The world doesn't have greenfield tin projects with quality ore bodies ready to be developed. So where's the tin going to come from? It's going to come from brownfields expansions, but it's going to come from marginal ore bodies that are of lower grade, that is not currently producing, and these ore bodies need much higher tin prices for them to be economically feasible. Okay, and therefore, I believe that the tin price has to stay very high to stimulate enough supply. And quite frankly, the cost of tin is irrelevant in the cost of an overall, or the overall cost of an electronic device. So it's not like they won't, because it's incremental supply and mining of marginal ore bodies. So on the back of all of those dynamics, I expect tin prices to be high in the foreseeable future, probably in the medium to long term as well, because they're relevant to the cost of electronic devices.
What's your kind of your break even here? With what tin price per ton is somewhat of Alpha Min's estimated break even?
So in terms of our all-in sustaining cost per ton of tin produced, a portion of it relates to the tin price. Okay, so one needs to bear that in mind. To give you an example, at a tin price of $18,000 a ton, that's half of where we are at the moment. Our all-in break-even cost is $11,000 a ton. So even at tin prices half of where we are today, our margins are 35%. As we reported to the market a week or so ago, at these high tin prices, our all-in sustaining cost or break-even level is $15,000 a ton. So at these prices, our margins are now in excess of 50%, closer to 60%. So really, all in, depending on the tin price, Trevor, we can handle prices as low as $11,000 a ton, and we won't lose money.
Okay. Are you seeing higher costs to mine from energy, steel, just the things you need to actually produce a product?
You know, we are fortunate in that our major input costs are diesel and engineering parts. We don't consume major steel. We don't really mill, so we don't have mill balls. We don't have reagents and the like. So really, our input costs are very minimal. Although we've seen higher oil prices and higher diesel prices, the impact on our overall costs are limited. So we're not experiencing major cost inflation, which I think is quite a big benefit. The real drivers behind our unit cost is our levels of production, point number one. And then, as I said earlier, the tin price does, as it goes up, it does have an impact on our costs, but the inverse also applies.
Last question, kind of more of a macro level view here, Maritz, is what could potentially be a headwind for tin? Could there be more tin coming online from somewhere? More supply coming on. What could be a headwind for the metal? Because it seems like it's just all been tailwinds for the last year.
Right. So I've been thinking about it, and the thing is, you would say to yourselves, well, what are the risks? The risks are that suddenly there's a lot of supply coming on stream because of the high tin price. Now, I do believe that there will be more supply in good time, although it will lag demand growth in the short term. So more supply will come in line. But the point, Trevor, is that the incremental marginal supply requires a tin price in any event. So it's a bit of a self-fulfilling prophecy. I don't see at these tin prices significant supply coming on stream in the short term. I believe that these prices are required for supply to catch up with demand growth, which I think is healthy. So that's not a major headwind. Historically, miniaturization of electronic devices was a headwind. So over the last 5 years, the intensity of use in tin in electronic devices reduced because of miniaturization. However, as of today's date, when I look at my mobile phone, it's slightly bigger than the one I had 2 years ago. And listening to the experts, the view is that miniaturization is flattening. Having said that, intensity of use is always something that works against commodities. So there will always be an element of that, even in tin going forward, but I believe gradually so. A world crisis will always impact tin, just like it would impact, the global economy in general. So I'm mentioning a few risks, but none of these, in my opinion, stand out as a particular headwind for tin in the short to medium term.
Where does your final product go? When you produce a concentrate, I assume, where does that go?
That's right. It goes to smelters in Malaysia, Thailand, and China.
Okay. We keep on hearing about potential as manufacturers and producers go directly to sources for their raw materials. Have you been approached from anyone, or you don't have to be specific, I understand, but are you receiving more interest directly from manufacturers to find a source for tin?
Well, it's early days. What I can say is that smelters are hungry for feed, particularly in China. China does not have enough feedstock to keep its smelters full. So we've had a lot of interest in terms of sending all of our concentrates to China. And what really happened was that the country of Myanmar, that borders with China, ramped up production over the last 5 years to the extent that they produce 15% of the world's tin, and now supply is tapering off because, again, Myanmar is moving into underground mines at lower grades. So the world needs more concentrates. China particularly is short in terms of feedstock into their smelters, so there's a lot of interest out of China for our concentrate. And I do think we are on the radar, but Alfman is already a significant producer. I believe we will become more significant going forward. So a lot of interest, is being expressed in what we do.
I know I promised you the question before was the last question. That's usually a fib whenever I do say it, because I always think of one more to ask. But Maritza, I will let you go. I know it's been a busy day for you, and this time difference has kept you up past the working hours, to say the least. But it's a real pleasure to have you on. I'm really glad we could get this interview done here on the podcast, because it has been just an incredible story, not only for you and Alphaman, but also for the metal itself. And I'm glad we could, finally get something put together and sent out to the listeners.
Thank you, Trevor. It's been a pleasure talking to you. Some great questions from your end, and good luck to everyone, all the listeners. Certainly for me, tin is one of the best commodities to be in, and we will do our ultimate best in filling some of the supply shortages out there as we grow our production base going forward.
All right. Best of luck, Maritza. That's Maritza Smith. He's the CEO of Alphaman Resources, again, trading on the TSX venture with AFM and the OTC. I told you I'd get it. The OTC with AFMJF. That's a wrap here. We'll be back later with more episodes from Mining Stock Daily. The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak to a licensed financial representative before making any investment decision.